Good afternoon. Today is March 22nd, 2024. So ES opened near yesterday's close and also low a day, suggesting that there wasn't much change in value overnight. And then the open was an open auction where we crossed the open several times before finding a direction. This was a clue early in the session to be mindful that there might not be many opportunities in the market today. Also, volume was light yesterday at 990,000 contracts traded. It was even lighter today, and tempo was very poor, especially in the beginning of the session. That's indicating that there wasn't much interest in trading at these prices today. Then A and B period had a poor low, just a few ticks above the overnight low, as you can see here, indicating that other time frame players were not in the market. And then C period was sold at B's halfback, also indicating weak sellers. We then auctioned lower and broke the IB low in an attempt to fill the small gap that was left from Wednesday. We fell one tick short of filling the gap, indicating weak buyers buying at very mechanical levels. D period also fell one tick short, leaving another weak and poor low. We briefly paused the one-time framing down in E period. And then F period resumed the one-time framing down. But it wasn't until G period that we were able to fill the gap and leaving only a few ticks of excess before auctioning higher. With the gap filled, we were able to one-time frame up and we balanced out the rest of the day inside of value. One thing I'd like to mention is that even though today was low value, if you're watching price action, it can appear that there were a lot of trades today. Hindsight bias is great at making us feel like we missed out on the action. All you have to do, though, is to look at the volume and see that there wasn't much value. 800,000 contracts traded today, I believe, is the lowest of this year to date and one of the lowest of last year. I also want to talk for a minute about weak lows and weak highs. So a lot of people will call those double tops and double bottoms. So if we look, this is a P&F chart. You can see this looks like a double bottom. These look like double tops. This is another lesson from the world of Twitter and technical analysis that many people get wrong, including myself. So a poor high and a poor low is where the market comes in, poor low, for example, which is where the market comes in and buys the low of a previous period. Or a poor high would be where they sell the high of a previous period. This is evidence of weak-handed buyers and sellers buying a very mechanical and a very visual level. And today, for example, we had many of those. So we had weak lows in A and B period. We had weak lows in C and D period. We had a weak high in I and J period. And we had a weak low in J and K period that led to liquidation and another weak low in L and M period. So there were a lot of weak lows today, suggesting that today was nothing but retail traders and other time frame participants were not interested in trading at these prices. I don't want to make any assumptions of why that is. It's just something to take note of. Since I'm a day time frame trader, all I'm interested in is trading today. I'm not interested in what the market's going to do over the next 6 months or next year as far as day trading is concerned. But I just wanted to point that out. There's nuances involved. Sometimes a weak high can suggest that the market is a little too long. Other times, a weak high can suggest that there's weak-handed traders. It's something that, after watching the market through the lens of market profile, it'll help you identify those areas and know when you should trade towards a weak low or towards a weak high, as opposed to realizing that perhaps the market's too long, there's a weak high, I should fade that. So I just wanted to point that out. So today's stats, we had volume 809,000 contracts traded. We had a range of only 17 points. Delta was negative 17,000, and our rotational factor was -1, suggesting that we had a rotational day with lower value, a lot of liquidation in the market, or a lot of inventory correction as people were selling their positions. But we had passive buyers that were obviously stepping in and absorbing that. We can see the cumulative delta here, and we can see all the lows that were made, creating that delta divergence. So I'll do a deeper dive this weekend, and I'm planning on posting a video on Sunday where I look a little deeper at ES, the higher time frames, the other indexes, and then also some other futures markets, gold, silver, crude, some of the grains and energy. That's it. I hope everybody has a good Friday and a good weekend, and I'll see you all on Sunday.